Now, look, keeping on the trend of technical analysis, I will bring up a bit of chart and a bit of TA that I have done. And we look at where we're sitting right now, and I've highlighted that using a handy green box. We've perfectly used a major level of support for Bitcoin, which is just under the $30,000 mark. And at the moment, we are trading around $30,000 US. Now, we've clearly broken down out of consolidation, and we've posted 6 consecutive red candlesticks.
Now, that's what I said would happen, right?
Exactly
I said
right.
that won't happen.
And on a weekly chart, we've also posted 6 weekly candlesticks for the red weekly candlesticks for the first time since 2015. Now, a lot of market moves driving this, one of which is Luna, but I'll let Adam take most of that in a second. But for Bitcoin, I do see a lot of selling pressure keeping this underwater for some time. I do expect it as well to break $30,000 and head lower. There was a scathing article in the Australian Financial Review today on cryptocurrencies with one of their journos highlighting it as a Ponzi scheme. I do think that's a bit of a harsh criticism. A Ponzi scheme, I don't think the definition quite fits there, but I understand his theories behind it. And also in the domestic news, that has obviously held back our domestically listed crypto ETF.
It's a bad week to list on
It flew under the radar. It flew under the radar about a fortnight ago. It was meant to list, but it was obviously blocked. And of course, they had the worst time to come back online. Market capitalization is roughly $400,000 of the crypto ETF, and the volumes were extremely low. So today, within 15 minutes of trading, the previous ETF that was listed did $8 million in trades. They only did about $150,000 in their first 15 minutes. So it just goes to show that when the broader market pulls back, Bitcoin can be hurt, and I do expect it to stay that way for some time. And then moving on to the Australian dollar just quickly, we don't talk about it as often. Usually it's quite stable, and we've been enjoying some healthy Australian dollar strength off the back of commodity prices. But of course, the pullback in metals and the strength of the US dollar has pushed it below 70 US cents for the first time in quite a while. Now, at the moment, we're about 69.5 US cents, and we could go as low as 65 according to Commonwealth Bank. However, in the medium to longer term, they do expect quite a lot of strength to come out of it. They do think it could go back up to the 75-80 mark in a very short space of time. So short-term negativity off the back of a potential hard landing and extremely aggressive rate hike cycle from the US. But of course, I do think there could be some strength in the Aussie dollar coming from.
Very good. Let's talk about something that is absolutely something I've never seen before. I've never seen any type of commodity stock, anything drop as much as it has, but it is Luna. Give us your quick 2 or 3 minutes on what's happened with Luna, which is obviously a cryptocurrency for those that aren't aware.
Yeah, so to really explain that, I need to really mention actually 2 coins. So one is a stable coin, so Terra USD. So let me actually just bring a quick picture. So if you're not aware, these are the logos of the two. So on the left we have Luna, on the right we have Terra USD. So basically the way it works is a stable coin is always backed by something. So the major stable coins on the crypto market, they are backed by real collateral, so cash or cash equivalents.
So they're meant to look like the dollar. Is they meant to look like a dollar? Okay.
Yeah. And so these stable coins are pegged using certain type of collateral. And the collateral for the biggest ones is real assets like cash or equivalents. But for this particular stablecoins, the collateral was just another cryptocurrency called Luna. And then what happened is there was an attack. At least that's what the people are suggesting. That it could be that someone really wanted to attack that network. So what they did, they dumped a lot of stablecoins on the market. So what is happening then that potentially drops down a little bit, and then what the algorithm is doing is basically removing some of that stablecoin from the market by burning it, but to keep the balance, what is doing instead is actually creating more Luna. So basically, it's moving value out of Luna into the stablecoins to keep the peg.
And what happened with Luna? Like, because this is exciting. What happened to it?
And as you move value out of Luna, it goes down and down and down, and we are down more than 99%.
Okay, so just to put that in a little bit of context, so if you bought it, how high was it 4 days ago, 5 days ago? $100-ish?
Well, not quite. It was between around 50.
About 2 months ago, it was trading at $120.
$120.
How about this? The maximum Luna you can buy in one trade is 9 million. A month ago, that would have cost you 900 million US. Today, you could have bought it for $10 Australian.
So you could buy 9 million Luna for $10. So if you put, let's just say, $2,500 into Luna, and let's just say you did that a couple of weeks ago, okay, you would now have what?
Less than $1.
Like-
Less than a cent.
Like, really? Less than a cent?
Less than 1 cent.
Wow, that's incredible. That's incredible. Far out. So
It reminded me of almost like a run on the bank kind of situation, because that's exactly what was happening. Confidence was fading so much in UST that the first dump on the market made people think maybe this stable coin isn't as stable as we first thought. So money flows out of it. And as Adam mentioned, to keep that peg as close to the US dollar as it can, the algorithm burns Luna, increases the supply of Luna, and of course pushes down the price. And the run on the bank and the loss of confidence in that particular market just kept on pushing it down.
if you bought